Prakash. Appreciate you joining in and good speaking with you. As always, have a good weekend. See you next week.
You too.
Pashupati Advani of Global Foray is now joining us to take some questions. Pashupati, good to have you with us here. Welcome back.
Thanks, Prashant.
Just a quick word, if you will, on the market itself. Are you, some that we spoke with, actually very few, are talking about what I think is presumably the oldest rumor in town before the budget, changes to capital gains taxation. Like clockwork, it makes an appearance and then we forget about it after the budget. Not that it can't happen, but I don't know if there is any use speculating about it or fearing changes on the negative side. Any thoughts at all, Pashupati?
Well, there are two things. One is that we have this, what I call the 31st January 2018 tax. So any gain above that level, and I think the Nifty is up about almost 25-30% from those days, 10% of that gain goes to the government. So it is, and that is not adjustable against anything. So in any case, the government is participating on the upside of the stock market. The second thing is with the calendar of 23 and 24 and political elections, I actually think this budget is going to be kind of soft. And it's not going to be, like something that's going to be hurtful, because I think all parties have realized that the market is not to be cut. So, I'm a little less, I'm more on the line that, the capital gains is probably not going to happen. As I said, we already have a tax, and then you'll have people suing, saying you've got double taxation on the same transaction and things like that. So, that's the other challenge. If they take that away and put capital gains, that might be interesting, but I think that would be also making it more complicated for the small investor, which is not what I think the desired outcome for the government is. Prashant?
All right. Hi, Mr. Advani. Nigel on this side. It's the first time we're speaking in 2023, so we're wishing you a good one ahead, and we look forward to your views all through the year. Mr. Advani, I was looking at ICICI Bank. From the highs that it hit on November 30th, well, the stock is down close to around 10%, and it's underperformed HDFC Bank. Now, valuation-wise, I recall when ICICI was at around 2 times and HDFC was more than 3 times. Now, they're probably trading at a similar valuation. Well, you have not been very positive on the banking names. At what level do you think that you look at these banking names as well? They've clearly been the consensus buy, but how would you view them?
They are a large part of the index, and therefore, if you want the index to go up, you have to be in this sector. I'm an investor, so I don't have to be in it. So, I'm kind of watching it, and I've kind of missed it. But I actually feel that there are some undercurrents. There are some NPAs that are coming up. There's, for example, there's some negotiation going on about RCOM. There's 28,000 crores to be written off. I don't know how it's going to be written off. It may be already written off. In which case it's better for the banks, but I think that overall that money has to be paid from somewhere, and it is that's kind of making me a little bit fearful. The second is that you've got a lot of NBFCs that have lent money to individuals via Amazon or via FMCGs and things like consumer goods. And things like that. So, those may or may not continue because, people are losing jobs. I mean, you're seeing people in the IT sector, for example, losing jobs. And then you've got this new phenomenon, this chat GPT, that's going to actually probably replace some call centers. So, these things are sort of very disruptive. And I think that that's what we need to be a little bit wary of. Nigel?
Right. He spoke about the chat GPT bit. I was speaking to some people and they said a lot of brokerage guys have said that a lot of the reports that they've written already have been through chat GPT just for them to test it out. Obviously, they haven't published it, but they're eerily similar to what they would have written otherwise as well. So it's an interesting trend we have to watch out for, because if a lot of analyst reports are written by chat GPT, then maybe analysts out here, people like us, are totally replaceable. I hope so long as there is no chat GPT anchor out here, I guess.
That's not going to happen, Mangla.
I hope that doesn't happen. Let's pray.
Let's get a question to Mr. Advani.
Yes, let's go to Mr. Advani.
I have news for you. I've seen actually on WhatsApp, one of the newspapers has put out an anchor speaking about things to be, which is done by AI. I guess it's been done by ChatGPT. So I guess
I thought you'd bring us good news. I thought you'd bring us good news, but no, you're scaring us. I thought you'd bring us good news, but you're scaring us further with artificial intelligence and all of that and stuff. But, my question to you is with regards to flows. Now, the first few days of a few sessions of January, we've seen an outflow of almost $2 billion from the FIIs. China has been outperforming. What do you think is happening out here? I mean, on the way up, we were outperforming. Do you think we'll decouple on the way down as well, where the world moves higher and we go lower?
See, people had run away from China because of what was going on and the fact that China had sealed their borders. Now they've suddenly opened up. And, you know, somebody who wants to come into China, the waiting is much higher than ours. So you're seeing, you know, even sages of the market like Chris Wood saying that I put money into China and I'm cutting 0.5% in India and Korea. Now, you know, that 0.5% cut in India and Korea is a lot of money for us. And the incremental into China is still a sort of a blip. But I think that a lot of fund managers, a lot of EM fund managers are seeing movement towards China because they think that now, you know, certainly the Chinese fund managers of Chinese origin are actually shouting from the rooftops saying, buy China, buy China, buy China. So that's also taking some money away. And we're seeing the outflows. And our market has been over at the top. It's been overvalued, but we have seen money going out because it's been such a good performer. Nigel?
Pashupati, what are you doing with your money? I mean, what have you been doing with your money lately?
See, again, you know, I have been extremely conservative. And what I'm actually seeing is that it's probably best to look at debt and to look at, I've been a gold bug, so I'm happy that gold is moving in the right direction. I've also been in debt, but I bought things like the REITs and things which are beginning to get affected because generally rates are going up. So REITs will come down and that I'm seeing a little bit of that. But taxation issues kind of leave me stuck in those. So I think that, you know, there is some movement towards more fixed income, more higher dividend type of investment. And I think that's where we're going to be. And that's, you know, and again, I'm not so bullish on real estate as other people are, but I think that real estate also people are looking at it as a yield investment as well, that the yields on real estate should go up.
No, got that. This, you know, Pashupati, in terms of the equity portion, right? Have you made any changes? Have you are you taking profits already? Have you already done that? I mean, how are you funding some of these?
I've got a portfolio.
Yeah, sorry.
No. I've got a portfolio that, you know, I'm actually comfortable with a few sectors. I was quite happy with specialty chemicals. I have lightened up, but they are also going down a lot faster than I thought, simply because they were all at 40x. Some of them are still holding some value, but I think that that's a sector to lighten up on. I'm very comfortable in mid-cap cement because I think that the government is doing a lot of infrastructure spending, and you know we're seeing cement demand going up. Of course, a lot of it is going from Adani to Adani, but besides that, there is some movement in the cement sector because of roads and because of buildings to be completed. So I mean, those are sectors I'm still, the hardcore basic sectors I'm still comfortable with. And I actually think that, you know, in the GDP, the basic commodity sectors will probably do better this year than the services sectors. And I think that's what's going to make the difference in the market.
All right, Mr. Advani, final question before we let you go. I recall when we started a couple of months ago, you said that maybe the big four from the new age themes, they could be a counter call. It seemed like you were giving them a second look. Now, in some of those counters, there will be quite a lot of supply. You know, maybe a Paytm. Have you invested in any of them? Are you giving it a look, or are you happy being a gold bug? And yeah, go ahead.
I had put Paytm at the front of the list, and I did nibble into it at these kind of levels. I think I'm at break even, maybe slightly down. Again, that shot of 3% of the company that suddenly came in the market surprised me because there was I'm waiting to find out who that was. But you know, as I said, out of the four, you know, Nykaa's been quite badly hit, and Zomato's kind of floating in there. And I think Zomato's okay. Paytm, I think, is the winner out of the four. So, you know, it is definitely worth nibbling at these levels.
Look at delivery, right? Delivery is at a new low today.
Delivery is at a new low.
Yeah, I mean, 2%, 309, all these names. Paytm, of course, has come up a little bit from the recent lows, but not by much, though. Pashupati, thank you very much. Although I thought to Nigel's question about new age, Pashupati is an avid private market investor as well, at least